Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Liz Klein of Calculus Capital to talk about their VCT and EIS funds. Hello Liz, welcome to the studio. So firstly, we're here to talk about the EIS fund. What is it, what differentiates it, and why should investors consider it?
Thank you very much for having me here today. It's a great opportunity to talk about one of the longest running funds in the UK. We've been doing this since 1999. What differentiates us is that longevity, is that experience within the team. Many of us have been doing this and doing this together for 25 years. So we understand the space, we understand what we're doing, and we understand how to invest in our three main sectors that we focus on, which again is a unique aspect of our fund. We invest in life sciences, we invest in software, and we invest in media content, which makes that unique blend of high growth and opportunity.
And you also manage a VCT. What does that aim to do for investors?
Well, the VCT immediately gives you a diversified portfolio, and we aim to give back 5% tax-free dividend as well. So it gives you the opportunity to invest across the sectors, mainly though in our high growth areas, which are software and life science. It brings the same depth and breadth of experience that the EIS fund does, and you get your yield as well.
And are they typically investing together, the EIS and VCT?
Yes, and that's actually one of the best aspects of the approach we take to investing. We believe that everybody should have the opportunity to invest in these high growth businesses that we have spent a lot of time making sure are the right investments for our clients, irrespective of where our clients sit. So we actually have a co-investment policy where we look to make sure that that we can invest for as many people as possible across our client base.
And taking a step back, could you give us a bit of background for those who aren't familiar to Calculus Capital?
So Calculus is, as I said, one of the very first EIS funds. We started in 1999. We have around 175 million of assets under management. We have a long history of investing in high growth and have invested specifically in life sciences, which is my area of expertise, for most of that period, including in some very exciting and interesting businesses that have given us an excellent return on our investment.
And your role there?
So I lead the charge now into life science investing at Calculus. I joined a couple of years ago, but I've spent 25 years involved in UK small and mid-cap life sciences, everything from time in the lab, brief time in the lab, to working on the sell side with listed companies, and working with individual businesses who are looking to fundraise, helping them strategize and work out what they're going to do with that, and helping them with a fundraise. Working with a trade association focused on UK life sciences, and joining Calculus 2 years ago, where I'm able to bring the breadth and depth of my network to bear to investing.
Very good. And so turning back to the companies that you look to back within Calculus, you mentioned your three sectors there, but is there anything in particular that stands out for you in the types of companies that you look to back?
Well, as I've said, my experience is mainly around life science, and because we work on a semi-sector specialist approach, we each have our area of expertise, but the whole team works together on each individual investment. But I think I'd like to talk about the way we do our diligence here. Because we have that semi-sector expertise, we are very good at finding the best way to understand the businesses we invest in. We have over 1,000 approaches, or nearly 1,000 approaches each year, and we make between 3 and 6 new investments. So our diligence is extremely stringent. And we make sure that before we even make an offer to a company, we are absolutely sure that it's the right team, with the right technology in the right place at the right time to suit our investors.
And for the EIS fund, how many companies can investors expect in their portfolio?
Around 6 companies. We make sure we cover the spread of our investments, but it's mostly around 3 into software, 2 into healthcare, and 1 into the media content, which we consider our diversifier in that.
And so could you give us some examples of recent companies that you've backed within the EIS fund or VCT?
Yes, I've got 2 great examples that show within life sciences, which I'll talk about here, why we have a breadth and try and have a portfolio effect within life sciences as well. So the first is a company called Lavrock. Lavrock is a gene silencing technology, extremely novel, could absolutely revolutionise the way that people are treated for certain types of cancers and certain potentially genetic diseases and other things. It was spun out of a business called Tropic Bioscience, which had taken this technology into plants, but saw the applicability into humans. It's interestingly the second investment we've made into a particular management team, having had a very successful exit, which gave a very high return on our investment, for the CEO's previous business, which was called Synpronics. This technology is very exciting and very game-changing, incredibly novel. And we had the opportunity to invest early and lead the round. And we led the round alongside similar-minded to investors to us, but also Lilly Ventures, which is comes from one of the largest pharmaceutical companies in the world. And it's great to invest across UK, US and corporate venture capital because we get a breadth of experience, again, into helping the business be successful.
And any other examples?
Yes, a great company that we invested in early this year called Tagomics, which is in diagnostics. They found a very novel way to help identify the tumour of origin, i.e. where it is in your body, in very, very early stage cancers. What's particularly interesting about this business is that it's a first-time CEO. It came out of his PhD at the University of Birmingham. And we have, alongside us leading the investment into Tagomics, Illumina Ventures and Agilent. And Agilent is a multi-billion-dollar business focused in the tool space, and very happy to be investing alongside them and other US investors and other like-minded investors to us.
So how do you find these deals and how do you win them? When you're co-investing with those types of investors, it feels like they should be fairly competitive funding rounds. How do you do this?
Well, they are. But I think the important thing to remember is we have a huge amount of experience investing in this space, having invested in companies like Horizon Discovery and Synpronics. So we have a very good reputation for the founders. I have worked in this area for 25 years and I know a lot of people. So again, it's much easier for them to approach me and say, look, Liz, will you look at this? What do you think? We get involved with some early stage accelerators so we can get to know businesses before they're ready for us to invest, because then we can see how management are driving the business forward. And because we have that depth of expertise, we can help management teams. And what management teams are really looking for is help and understanding and how to help them drive their business forward. And we have excellent experience working cooperatively with these teams to help make sure that we all have a successful return on our investment.
So how about some of the more established holdings within the Calculus portfolio? Any particular highlights there? How are they performing?
Yes, so we've got some excellent companies in our portfolio. A couple of examples include Oxford Biotherapeutics, which is a novel oncology business They have deals at the moment with Boehringer Ingelheim, for instance, one of the largest pharmaceutical companies in the world, and they have their own platform as well. And it's one of our top 10 holdings in our VCT. Another example that's again very different from this biotech is Tesaro. Tesaro is involved in the tools and reagents space. They have a really new way to help cell and gene therapy manufacturing to become much, much better. They're very exciting. We actually recently reinvested in them early this year because we think that they've got great opportunity to change the way affinity reagents are delivered.
And so, Liz, it's been a quiet time for exits within the venture capital market. Has that been the case for Calculus? Do you have any recent exit examples?
Well, like everybody else, it is a challenging time, and it's very important that we find the right balance between exit and time to exit for our investors. A good example of a recent exit for us was an AIM-listed tech company called ActiveOps, where we got 5.7 times return for our investors. But we do look in life sciences to exit in multiple ways. It can be through a listed market, or in many cases, it can be a trade sale as well. We're always looking for the right opportunity to make sure that that happens and we get a positive return for our investors.
And are you finding it quite challenging at the moment, the exit environment?
Yes, the exit environment is, the whole funding environment is. And I think one of the things to remember is that it allows us to make very helpful investments in companies that are looking for more funding, that might have maybe traditionally gone and gone on to AIM or gone on to other markets. We can now take the opportunity to get that positive return for our investors because the companies are looking for different ways to fund.
So let's turning to risks. It's risky investing at an early stage. How risky is your part of the market?
Well, there's always inherent risk in our part of the market. These are not, in life sciences at least, rarely revenue-generating businesses that we're investing in. What we're doing is we're investing in the technology, platform technologies, where we de-risk by not investing in single assets, invest in these platform technologies with opportunities to generate a return through multiple ways they can exit. We also look to make sure that we have a spread across life sciences, everything from diagnostics to biotech. And we look to make sure that our investors have access to multiple investment areas, including life sciences and tech, which have slightly different profile, and the creative content.
It's been a challenging couple of years for venture capital. But where are you finding the biggest opportunities at present?
Well, there are significant opportunities in life sciences because the life science technology is changing so fast. We have new technologies that are getting Nobel Prizes 4 years from being announced. We are seeing completely novel ways to make sure that we can get drugs to market. Drugs to market means better lives for everybody. And that's what wakes me up in the morning. We get to make a positive return on investment for our investors, and we get to make sure that people have longer, healthier, happier lifespans.
Fantastic. So Liz, to sum up, for those that want to invest in a VCT or EIS fund this year, why should they invest with Calculus? Experience and track record. That comes to the nub of it. We've been investing in late stage growth companies for the last 25 years. We've been doing it very successfully. We understand what we're doing. And because we have a very focused, very strong diligence program before we even get anywhere near investing, we make sure that we're looking for the right company for our investors to invest in. Liz Klein of Calculus Capital, thank you very much. Thank you for having me.
If you are watching on YouTube, please press like and subscribe to the channel for more.